This is Gary Artek with Wicked Stocks bringing you the daily Apple report for Monday, December 5th, 2022. Let's take a look at the charts. I will begin, with the big picture here. We still have a long-term descending two-thirds speed line that is based in part on the October low. And when we rallied back up to the two-thirds speed line in later October, we didn't test it exactly. We rallied within 1% of it and fell off. And we came back and we've reapproached it several times. It is trend defining. In other words, below which selling pressures can build as we move through December and into January, and below which we can rotate south down to 123.87 perhaps by the end of January. This is long-term support that, if tested, can contain selling through the first quarter, possibly well into 23. I'll get to that in a moment. On the way down, we have 134.37. Now, under other circumstances, I might call this, a 2 or 3 star support. I'm going to keep it at 1 star. In my experience, the double bottom is sort of there for violation. Triple bottoms are much less common. You've got a clear double bottom here at 134.37. We may bottom out here for a day on the way down, but I want to say still, though, for the graphic presentation here, you could say that 134.37 in reach over the next 2 or 3 weeks. And over the next couple of months, 123.87. A settlement below 134.37 would likely accelerate 123.87 to within 1 to 2 weeks. So that's still sort of the big picture outlook. Now, on the way down today, I do have 142.92. This former channel bottom, we settled just below it about a week ago. We followed through on a Tuesday, and then we had the Wednesday Powell speech, which ripped the market back to the upside. But we don't have the buy signal yet longer term. I just want to stress that here once again. We don't have a sign that Apple wants to sustain a meaningful rally as we move into the first quarter of next year. That would come in part with a settlement above 149.65, and then entirely if we were to close above 157.52. I'll cover that in a moment. But I do want to just emphasize that that this was the Powell speech. The market is now hesitating, and it can fall off again. Nonetheless, 142.92 remains a decent support level. Given the circumstances of its violation back to the upside, I still think we could consider it able to contain daily selling pressures. We have minor points in here, well suited for aggressive day traders. You've got 148 even is actually Friday's high. If we push through at 149.65, that long-term speed line is likely. 145.78 is a Fibonacci. We broke below it by just a bit on Friday, 145.65 low. 144.81 is the high of the low, and that's a meaningful support on a pure intraday basis only. It's 142.92 that is sort of the stick your neck out buy level for the day, and perhaps into later week. We may come off of this formation back to 149.65 long-term speed line within a matter of 3 to 5 days of doing so. But I'll say that closing below 142.92 is a sign of weakness as we move through the balance of the week and even into next. I would then anticipate 134.37 by the end of next week, so forth and so on the way down to what could be our long-term target below 149.65 again. This is for you big picture traders. If you trade Apple and you're looking to buy it, let's say, on a 2 to 3 month basis, I don't see a sign of that unless we close today above 149.65. Until then, you're really holding out for a possible mid-120s downside target, and you can bottom pick that aggressively. Let's say I'm going to show that on the weekly chart. 123.74 is the channel bottom on the weekly chart. Also on the weekly chart is a rising two-thirds speed line off that COVID low of 118.87. So if given the opportunity over the next couple of months to buy the 118.87 to 123.74 area, this can be done so aggressively as we move through Q1 and even into later year. We can come off of this area nicely into later 23. Is it a target below 149.65? I don't want to go that far. I just want to say attainable, all right? That selling pressures can build, and you can play the short side. You could consider holding below 149.65, buying 125, 120 out of the money puts that don't expire for at least 3 or 4 months, so you can preserve your delta on the way down. If you buy it inside of 1 or 2 months, you could be right on the trade, but the theta, the time decay element, will wreak havoc on the premium of that out of the money put, and you won't see really anything in return. So I think also you could consider buying 135 out of the money puts. If you're more of a 2 to 3 week swing trader below 149.65, you could buy 135 out of the money puts that don't expire for at least a month, maybe two. Just so you know, a wickedstocks.com membership delivers regular daily video analysis in the SPY and Triple Q, weekly video analysis in the S&P 500 index, the NASDAQ 100 index, and a U.S. Treasury ETF, and 2 individual stock pick videos every week. Check out our other content by clicking the link below. Now to the upside. If we happen to close today above 149.65, we do have a buy signal. I always respect the 2/3 speed line for its buy signal qualities. I'm going to say a buy signal to 157.52 within 1 to 2 weeks, all right? Now, it may pan out that closing above 149.65, as we look ahead over the next few months, that it actually resulted in 180.29. But I really don't want to go there. I think if you're playing the short side in Apple, you don't want to be short above 149.65, whether that's for, the next week or the next month. 157.52 though would become a 1 to 2 week target, and this is our clear-cut buy signal into Q1. So closing above 149.65, a 1 to 2 week target at 157.52, which is also heavily weighted as a 4-star resistance area, able to contain multi-week highs, in other words through January perhaps, and we could fall off. And then yes, closing above 157.52, I have a 2 to 3 month target at 180.29 where we can top out on a quarterly basis. So, closing above 149.65, might you buy 180 out of the money calls that don't expire for at least, I'm going to say 6 months. It's not going to take 6 months to get there, but once again, you don't want to buy a 3-month expiration, a 180 out of the money call, and see you correct on the actual directional move, but nothing in return as you approach your strike price. You can buy above 149.65, but I want to say aggressively so above 157.52. And also know that if you buy above 149.65, this 157.52 will likely test your patience as we could come off of it. So you could try the stair-step approach, buying above 149.65, taking profits at 157.52, and then climbing back on full force, long position above 157.52. If we close above it, then anticipating the low 180s. I think that pretty much rounds it out for Monday's Daily Apple Report. Please click like and subscribe if you haven't already. I'll be back tomorrow with Tuesdays, and you have a great day.